Okay, good morning, everyone, and welcome to our webinar on obtaining and refinancing small business loans. My name is Crystal Irons, and I'm the director of the Missouri Small Business Development Center at Missouri State University. We're excited to have everyone on this webinar with us today. This program is being offered in partnership, of course, with the Missouri SBDC at Missouri State University and the U.S. Small Business Administration. So we greatly appreciate their continued partnership. We have a great lineup of speakers to give you some information around obtaining and refinancing loans. So with us today, we have Ron Bassnett, who is the branch manager with the U.S. Small Business Administration in Springfield in the Kansas City District Office. We also have with us Jesse Huey, who is their SBA loan officer and assistant vice president at the Bank of Missouri, and Ron Martino, who is an SBA business development representative with Arvest Bank. So welcome to all of you. And again, thank you so much for agreeing to be part of our panel and share your expertise with everybody on the call this morning. So a few housekeeping things before we jump in. I put in the chat, but please be sure to update your screen name to include your first and last name or your first initial and last name so that we know that you attended, and we can be sure to follow up and provide you some additional information after this webinar. Also know that I'm recording this webinar, and so that will be posted in the next day or so in our webinar library on our website. As we go through the presentation, please feel free to type any questions you might come up with in the chat feature, and then towards the end, we will make sure to try and answer as many of those as possible. So with that, I will pass it over to Ron to kick us off.
Thank you, Crystal, and good morning, everyone. My name is Ron Bassnett with the Small Business Administration here in Springfield, Missouri branch office. Glad to be here this morning. Again, the goal is to just provide a high-level overview of what SBA is, and then we have a great line of speakers, Jesse and Ron, today to talk about refinancing the loan, a small business loan. And I'm thankful for our resource partners and also our lending partners that have provided this support so that we could have this training here today. So the Small Business Administration, we often get confused with some kind of small business association. That is incorrect. We are an independent federal agency of the U.S. government. We were established in 1953 with the Small Business Act of Congress. Next slide, please. The mission of the SBA is to help small businesses start, grow, expand, and recover. You might be very familiar with SBA these days because of the PPP loan and also the economic injury disaster loans. Next slide, please. So how we do it, right? So I would like to think of it as like 4 different pillars. The first one is the entrepreneurial development. This is where we work very closely with our resource partners like the SBDC, SCORE Mentors, Women's Business Center, and also the Veterans Business Outreach Center to help entrepreneurs and small business owners learn the know-how of the business basics. And again, we are very successful in this training and outreach because of our resource partners, and we greatly appreciate their partnership. The next is access to capital. SBA provides loans to small businesses, government guaranteed loans to help start or grow their business. The refinancing a small business loan potentially using an SBA loan. That is what we will we'll discuss more today. The next is government contracting and small business certifications. If there are small businesses that are interested in growing potentially by selling their products or services to the federal government, given the government consumes those goods and services, we can help with exploring that avenue for you. We also support small business certifications like the 8A Small Business Development Program, women-owned small business certifications, or economically disadvantaged women-owned small business certifications. We also work with Hub Zone certifications. These are businesses located in historically underutilized business zones, and then also service disabled veteran-owned small businesses. Now, the disaster recovery for Federally declared natural disaster areas, SBA provides low interest loans to renters, homeowners, small business owners, and some qualified nonprofits. Next slide, please. Access to capital, right? So, our theme today is going to be helping small businesses in terms of obtaining and refinancing a small business loan. With the exception of disaster loans, SBA does not actually make the loans directly to small businesses. The loan programs are administered through participating banks, SBA lenders. SBA only guarantees the loan on behalf of the borrowers. And SBA also does not provide any grants to start a business. And again, the guarantee is like an insurance policy that the bank buys from SBA. The SBA promises to pay the guarantee share of the loan if the borrower defaults. So basically, I go to a bank, try and get a loan. The bank says, hey, I cannot do this loan because of XYZ reasons. However, if SBA is willing to accept and guarantee these loans, we can potentially work with it. So basically, we do not compete with traditional banks. What we work with is loans that are promising, but then there are a few things missing. So for borrowers, the government is vouching on behalf of you so that you can get that loan. And for lenders, SBA provides that guarantee so that some of that risk is taken away from the lender. With that, that's all I had this morning. I'm going to turn it back over to Crystal. Thank you.
All right, thank you, Ram. All right, so now I'm going to pass it over to Jessie Huey with the Bank of Missouri, and she's going to walk us through some things we need to know about refinancing. Jessie?
Thank you, Crystal, and thank you, Ram. So overall, kind of it's titled Benefits of Refinancing, but overall, these are honestly just some benefits to general SBA programs. They do tend to have longer amortization than commercial loans. It is not eligible for actually to have a balloon payment. So I know, especially through COVID, that is some problems that businesses have really been facing, is that their current notes or things like that are on balloons, which means that everything comes to being all due at once. So the SBA requirement is actually we cannot have these. So everything is termed out on a regular basis, and every year the loan will adjust to make sure that it's paid in full on regular payments by the end of the note. We cannot actually demand a note. That actually means that if for some reason a business if they are making regular payments and there are no defaults or anything on it, then we are actually not allowed to call the note, which means that we would ask for all the money back. So that is only allowed in SBA if the loan is delinquent up to 60 days. And then this also may allow for some additional funding. SBA loans do not always need to have be fully collateralized. So especially that's why it's a great program for the refinancing, but especially new businesses and things that maybe don't qualify on the commercial basis. It would be a great fit in order for the SBA program to hit these avenues. Next up, we're going to talk about just general requirements of the refinancing program. So overall, the proceeds that you are asking to be refinanced must have been originally used for a qualified purpose. In general, SBA really does have most small business needs are truly a qualified purchase for the business, but it's something that in order, if you refinance a loan using SBA, you must certify that it is qualified, an original qualified purpose, and then you also must prove it to the lender as well. The new loan for SBA is required to be on reasonable terms, which means the ones that they are refinancing is considered to be on unreasonable terms. This must show a longer term out and more reasonable monthly payments for the borrower. This can be credit cards that are at a high interest rate that are causing distress to the borrower. It can be a line of credit that is actually technically ballooning, which SBA does consider it to be in reasonable terms. So that is one thing that the lender must justify in order to have a business or a loan be able to be refinanced through the program. Another thing is if the loan is on regular payments, we must be able to qualify a 10% payment savings. So right now, there are obviously lots of good benefits to the SBA program. So we have to still make sure that even in that we can prove a 10% payment savings from whatever loan is being refinanced. Overall, another general comment is it must be business debt. SBA is a program that is actually set up for only small businesses. And so whatever this debt is to be required, it must be for the business use. It either must be in the business name, or that if it's something in the personal name that is used solely for the business purpose, it must be justified and documented with receipts and invoices and things like that. And then it also must be reported on any sort of business financial statement in order to actually qualify as a business loan. The last thing that you actually must provide is an original copy or of the note, and then the security agreement, or if there's not a security agreement, it'd be a deed or something like that, so that we can see what the purpose of it, what the terms of the loan are, and any repayment terms that we need to be aware of. Okay. Kind of some general questions we do want to focus on is just overall. So a question we get a lot is, what if it's credit card debt? If it's in the business name, we actually have a certification signed by the borrower certifying that everything that was used on that credit card is actually in the business name and was all used for business purpose. We can refinance debt that is actually on a personal credit card, but it does become significantly more complicated. So that certification must be completed, showing that the business was actually, or that the debt was used for a business purpose. But then also we must have credit card statements and receipts for everything totaling the entire amount that's being refinanced. So that can be very tedious for the borrowers. So overall, we always recommend that if a borrower is going to use a credit card for their business, that they make sure it is the business name in order to meet these qualifications. As I mentioned previously, credit card debt for a small business is always deemed to be on unreasonable terms because of the high rate of interest and the long payback time that it does require. The next question is seller carryback. So this is kind of an example of when someone buys a business that the seller will hold back a certain, either all or just a portion of their debt to allow the business in order to have some kind of skin in the game is the best way to word it, in order so that they can get their feet wet and really run the business. So SBA does require that this is in place for 2 years and has active payments for 24 months before any SBA loan can refinance it. That is a very specific requirement that is set forth to seller carryback and something that needs to be considered if you have that type of situation. The next question is specifically associated with refinancing the same institution debt. So I'm going to talk specifically about 2 situations here. You can refinance SBA loans, but it is very difficult to refinance an SBA loan with the same institution because at that point, an SBA loan is always meant to be on reasonable terms. And so that is one thing that is always taken into consideration. If there is a commercial loan or something along those lines that is actually same institution debt, which means it is held with the same bank, it can be done. It can be processed in a similar manner, except it does require additional SBA approval to make sure that the bank is not either shifting debt or something like that in order to be in the SBA program. So that is actually sent directly to SBA, and they are required to make that determination on behalf of the bank. So the last thing is on real estate refinancing, which is definitely an option in the SBA world. Definitely something you may be able to take on longer terms, but you are required to occupy at least 51% of the building. SBA does not actually do loans for investment property or investment companies. So you are required to actively operate at least, as I mentioned, 51% of your company. Again, but SBA may even consider up to 100 on things that it does like to see. Okay. Next off, we're going to talk about the documents that are needed for each loan. Again, it varies by bank, but it also varies by your loan request and anything that is specific. So there are a few things that I'm just going to discuss here that are general terms. First off is if your business has been in operation for at least 3 years, then we do require 3 years of tax returns. And that is especially all the business. Typically, SBA does like to see the 3 years of the personal to correspond with the 3 years of the business. But technically, I believe according to SBA policy, only 1 year is actually required. But I will acknowledge banks will typically ask for the 3 years. We do require a current year-to-date profit and loss and balance sheet. SBA policy is that it must be within 90 days, but overall banks actually like to see them as close of time frame as you can come forward, is because they must be within 90 days as of the day of closing. So the closer you can get to the application makes it so that the financial statements are good for that much longer. All banks do require a personal financial statement of all owners of 20% or more. And that actually is required for anyone that owns personally. If it's a husband and wife, they're required to be either a joint statement or a separate statement for each borrower, but we are required to have one. And then this, again, typically can be on any general form, banks of general forms, Excel, things like that. But SBA, there are certifications on the personal financial statement that the borrower must certify to, showing that they are eligible for SBA. And then the last thing is, especially if we are focused on refinancing debt, we do have to have a current debt schedule showing specifically what are the payments, how are they structured, and so that way we can ensure that they're eligible and that we are putting you in a better situation and that we do have all the debt included in those. Again, for additional SBA loans, there is a general SBA application that is required. This does typically include that personal financial statement, as I mentioned previously. But the key thing is it does include it's called a 1919, and it's a verification of SBA general eligibility. There are questions regarding to the business as well as the owners and the guarantors. And so that document and the general SBA application is required. Every bank honestly may have a little bit different things in their SBA applications depending on what part of the process that they collected in. So that's actually general SBA application is the best way to word it. If you do have accounts receivable and accounts payable, we are required to have aging summaries for these. It's that way we can see the projected cash flow and how everything operates in the business. If we are refinancing a note that is on regular payment terms, we are required to have 36 months of payment history, showing that everything is on time, and that if there's anything that's more 30 days, we have to justify and document of why any delinquencies would have occurred. As I mentioned on the seller carrybacks, we're required to have these for 24 months. And then if the loan is not in effect for 36 months, for all terms of general refinancing, we're required to have as many months that are available. And then as I mentioned previously, there are other documents based on the loan structure. Especially in the SBA world, each loan is very unique. And you'll have to rely on your lender in order to make sure that you've got the right things for the right loans. We want to talk about just some general eligibility topics. This is for SBA specifically, not necessarily the refinancing program. But first off, you cannot actually have a prior loss to the government. This is actually, so since it is a government guaranteed program, they want to make sure that someone who hasn't caused either a previous loss through a defaulted home loan or defaulted SBA loan cannot participate in the program in the future. Again, something you must certify in accordance with SBA, but it's again another report then that the lender does verify. Overall, you also must be current on all taxes. This allows us to be able to confirm that, I apologize, that we are able to confirm that everything is current and moving forward. If you have delinquent historical taxes, you are allowed to be on a payment plan with SBA and confirm that everything is, with the IRS and confirm that everything is current in order to proceed in a satisfactory manner. I will note that even on the payment plans, we do want a written explanation of what occurred in that situation of why the taxes aren't current in order to ensure it doesn't happen in the future. Overall, SBA does require guarantees for each owner of 20% or more of the business, but then they can also look for additional guarantees if it'll make the program stronger or if there's key people involved in the company. That is one thing that SBA can actually ask for and specifically look for. But minimum requirement is 20% or more of any owner must guarantee the note, and it is a full guarantee. It is not limited to a certain portion of your ownership or anything like that. Overall, SBA does have a lower collateral requirement. The best way to word it is that an SBA loan cannot be denied solely on the basis of lack of collateral. That is why they offer the guarantee, is because there are a lot of small businesses that may not have the collateral available. But overall, if the collateral is available, it is required to be pledged for the SBA loan, especially any collateral focused in the business name. There are a small set of ineligible businesses and industries that are not available for SBA. And the main one to focus on is specifically investment property. If you are buying rental houses and specifically putting money in and then renting them out for a long basis, that is considered an investment, and you are not actually occupying that business. And so you would not be able to qualify for SBA on that focus. Along the same lines, it's anything that is considered long-term living. So apartments, mobile homes that are more than 30 days, things like that are not actually considered eligible for SBA. Okay, and then real quick, we're actually going to talk a little bit about the non-SBA terms and kind of what it looks like. And we talked about SBA having more flexible terms overall, but we kind of want to discuss on what maybe a conventional commercial loan would look like. Amortizations overall are typically a little bit shorter on the conventional side. So in a conventional loan, like let's say for an equipment, it would maybe be 3 to 5 years maximum. On the SBA world, you can actually go up to 10 years. On a real estate loan, maybe looking at a maximum of 15 to 20 years, which in SBA, you can go up to 25 years. So what it does is it allows more of that payment flexibility and be able to have that overall. Kind of in general, rates are based on the risk of the project and everything overall. So there's not really a magic rate that we can quote at any point. It really depends on the detail, the personal credit of the owner, the collateral offered, and everything kind of as the project as a whole. But typically, if something qualifies conventionally compared to SBA, typically the conventional rate will be a little bit lower, focused because it is considered less risky if it doesn't have that kind of the missing item that Ron had mentioned. Cash flow requirements, honestly, are actually typically the same for conventional versus SBA, except for on SBA, you can actually focus on projections. So if a business is not currently cash flowing, but they're going to change key things in their business in order to cash flow in the future, that is a nice thing that SBA can actually use those figures in order to move forward and focus on the future cash flow, which again gives a borrower more flexibility. There are, as I mentioned previously, collateral requirements on a conventional loan. It is required to be fully secured, but a SBA loan, as long as all the collateral for the business is pledged that is available, then it can actually stop there, and SBA will come and kind of help fill in that gap. And then, as I mentioned previously, rental properties are not available for the SBA program, so that is something that's always traditionally done during the conventional loan program, and able to move forward in that avenue. Lately, there's been a decent amount of inquiries on rental properties and things like that. So always something that's great to mention. And then at this point, I'm going to pass it back to Crystal.
All right, thank you, Jesse. Appreciate you sharing that information with us. So with that, Ron, I'd like to have you speak to us about obtaining a new business loan and what that might look like.
Thank you. I believe a lot of the business owners applied for loans in the past have always heard the 5 categories we look at, which is character, capacity, capital, collateral, and conditions. That's been around. I've been in banking for over 30 years, and we've used those items to look at for any conventional loan, pretty much anything, even on the consumer side. To speak a little bit about each of those categories, just kind of give you an idea of what we look at for each. Oh, backwards. There we go. The first one is character. What we look at for character, we want to see that we look at the credit reports, so the personal credit reports, credit scores, any references. We usually on our loan applications will ask for business references, and we utilize those along with things like that to kind of show that the borrower has character that they will go ahead and no matter what obstacles may be in the future. That's a very important part of SBA and the bank looks at. We even have a 1919 form, which is the SBA form, some questions of character that have to do with legal issues and bankruptcy, things like that. So that's a very important part we look at. Really, that shows us whether or not you have in the past the wherewithal to show that you can pay your loans that you've had in the past and your current capacity to pay the loan that you have coming in, and have the ability to pay all your debts, including the loan that you're going to be getting from the bank, and that's guaranteed by the SBA. to help us determine that, a good accountant, good CPA is really paramount, because we're looking at financial information. If we determine through the information you supply us, because it's on quick, your assets are negative, all these positives, or for us as bankers, your capacity to be able to pay that loan back. Because banks and the SBA are really, they're not companies. The borrower to be able to put some of their own capital into the transaction, and whatever happens, if there's a financial downturn or something like that, continue on. We have have some backup capital on their personal financial statements and financial statements, because you never know what's going on with it. To operate a few months with various sales or your expenses up unexpectedly. So we want to see that you guys, that has the ability to have some internal capital where you guys put that in. Collateral. We always look for collateral to repay the loan as a secondary repayment. As Jesse, SBA is not really what we call a collateral lender. Banks are, and that's why we sometimes look at the SBA program to help get loans on the books, because they're collateral light. They may need a lot of money for working capital or purchase a business. If you're purchasing a business, there's a lot of blue sky. Generally, they don't have the collateral to that a bank only wants to secure that loan. Or if you're asking for a lot of working capital, a lot of times there's not a lot of collateral in the business to support that either. So that's why we go to the SBA, because like Jesse said, the SBA doesn't turn down loans solely because of lack of collateral. That makes the bank feel better getting the loan with that guarantee, because then we can kind of waive our general policies as what type of collateral we're requiring. The final C that we look at are conditions. And, you know, with what's been going on for a year and a half, you know, conditions are getting to be more and more important, because what we look at, we not only look at the national economy for conditions, look at local, what's going on, how risky the business is, we have a lot of information we can look at in that, and that's how we also make our loan decisions, based on risk of different things like that. Next. Okay. Like just said.
Hey, Ron, you're cutting out pretty bad. I don't know if there's somewhere you could move to.
Yeah, I can, but I can't see the screen.
Okay.
Hold on a minute. Let me try. How's this?
That sounds better.
Okay. All right. Documents needed for a loan, an SBA loan. Like Jesse said, all lenders have different loan applications, but they basically ask for the same information. They ask for the borrower's name, any guarantors or owners, financial information, current bank accounts, where they're located at, things like that. We need personal financial statements and tax returns. And once again, Jesse already hit on that. The personal financial statements have to be dated within 90 days of the time that we're approving the loan. One thing I do want to mention that they have to be signed by husband and wife if it's a married couple, even though the wife may not be part of the ownership of the business, or she may not even be on the loan. SBA requires household financial statements so we can look at, we have to answer questions about credit elsewhere, whether or not the business really needs the money, and the guarantors that are on the loan don't have the wherewithal to actually put that capital in and not necessarily look at an SBA loan. So financial statements we look at very hard. Another thing I want to mention about financial statements, make sure that they balance, that the assets are totaled up correctly and the liabilities are totaled up correctly. One thing we see a lot where people put their life insurance as an asset. The only time we really look at life insurance as an asset if it has cash value. If you have $1 million policy, you can't inflate your assets by $1 million just because you have a term life insurance. So that creates a lot of back and forth and delays in us processing by having to get new updated financial statements. Business plans are very important. That tells us what you're looking at as far as what the loan proceeds are going to be and what the plan is to have your business be successful. Tells us that you put some thought into it and you've done research. Financial projections, that's part of your business plan. We want to see, and that's mainly for businesses that have not been around for more than a year. If it's a startup, we want to see your financial projections, your income statement, balance sheet, and cash flow statement. Obviously, we want to make sure that there's a way that you can pay the loan back. Detail of total funds needed. SBA requires that we really document the sources and uses of the funds because we want to make sure that the funds being drawn on the loan are for valid business reasons, and it's things that the SBA allows in their policies and procedures. And documentation of items to be purchased, that also goes with the sources and uses because that's going to be our collateral. We need serial numbers on equipment over $5,000 and just general information about what you're buying and using that money for to help with the collateral. Can you still hear me?
Yes, that
Hello?
works a lot better.
Okay.
Yes, it works a lot
Okay.
better. Thank you. All right. Thank you so much for going over that information as well. And now we just kind of want to open it up to all three of our panelists and talk through some general questions that we get, that they get on a regular basis about loans. So Jesse, I'll start with you and kind of give us an idea of what the interest rate is for small business loans. I know you started to talk about this. There's no kind of magic number, but walk us through how you guys kind of look at that at the Bank of Missouri.
Yep. So overall, SBA does not actually set any sort of minimum that can be charged on an interest rate on a small business loan, but they do actually set a maximum for 7As, which is the most common program, which is actually prime plus 2.75%. It is actually very common and preferred. A preferred method by many in SBA is that it's actually on a variable quarterly adjust. Which means that if prime does increase or drop, that the rate will actually adjust to it. It's a way for us to stay on top of the market rates and especially when COVID hit, when prime did drop, it actually dropped all the rates of the small business clients. So right now that is actually 6%. And that is again, based on the 7A loans. There are additional SBA programs that have different market rates, but that's the most common one to discuss for debt refinancing.
And Ron, anything you would want to add about what the interest rate is for small business loans as you guys look at that over at Arvest Bank?
Yeah, no, we actually, we tend to do a little bit better on the rate on SBA loans because of that guarantee than normal conventional lending, even though the risk is a little bit at times higher going in before we make a decision we're going to go with the SBA loan. But generally, you know, it's anywhere from prime all the way up to, like Jesse said, 2 3/4 over prime. You're going to find banks are pretty competitive on rates, you know, especially if they want the loans. So it's been years and years and years and years since I've seen really high rates on SBA loans.
Okay. So Ron, we'll start with you on this one. How much money do I need to contribute in order to get a business loan?
As much as you can. The SBA requires a minimum of 10%. Once again, that is the minimum SBA requires. Banks generally still like to see more, and really depends on the kind of loan that we're looking at. Business acquisitions, we look around the 10 to 15% level. Startups, we still look at, you know, between 15 and 20%. Really, like I said before, we're not venture capitalists. We're not the sole financing source of your business needs. So you do have to contribute some capital into the transaction. And once again, that just makes us feel a little bit better that you have a commitment there and you're going to be able to go ahead and continue paying even if there's a downturn in the economy, because you do have some skin in the game.
All right. And Jesse, anything you want to add on owner contributions?
Yep. So one of the biggest comments I just want to make sure to kind of add is this cannot actually typically be any sort of loaned money. There are certain specific situations in which it can be a loan. It must be repaid back from something outside of the business. But again, as the banker point of view, we love to see that the borrowers have taken the time, have saved the money in order to show that they are truly all in on this business.
Great. So Jesse, I'll throw it over to you again. How long does it generally take for the loan process?
So overall, honestly, there are bad rumors of how long the SBA program does tend to take from especially historical years and things like that. Banks now have actually gotten very efficient on it. Overall, we ask for about a week once we have a complete application to go ahead and make our loan decision. And then typically, if there's not real estate involved, closing can be within 30 days after that. And if there is real estate involved, it can be up to 45 or 60, depending on how long the appraisals take to get back. Kind of honestly, the biggest comment overall is for the biggest delay, it seems to be, is sometimes we have to have some documents in place or reports in so that we can order additional documents that are needed. And that kind of time in between seems to be the biggest delay.
And Ron, anything you would want to add on the loan process itself and the timeline? We might have lost Ron. Oh, you're muted.
I just unmuted myself. Can you hear me?
Sorry. Yep. Sorry. Go ahead.
Quit muting me. Okay. As far as how long it takes, preferred lenders like us, and I believe Missouri Bank is also a preferred lender, we don't have to send these things directly to the SBA unless there's a conflict of interest or some other issue that requires us to send it some other part of the program, like an ESOP. We're financing an ESOP, things like that. They actually have to go to the SBA. So really, it takes about as long for us to process an SBA loan as it does a conventional loan. One thing I do want to add, though, the time sometimes gets delayed because certain types of loans, like there's a seller or a buyer of the business, and the process of getting documentation from the seller is dragging on, or there's no signatures and dates on forms, and we have to send forms back to the business owner to get those corrected. A lot of times that's where the hang up on the process. But once we get everything that we need and everything is dated and signed properly, and we start that process, it really doesn't take any longer than a normal conventional loan.
Okay, great. Jesse, are there prepayment penalties for paying off my loan before maturity? You're muted, Jesse.
Sorry, technology. Overall, SBA has a general policy that if the loan maturity is 15 years or more, there is a 3-year prepayment penalty on the loan. We call it a 5-3-1 basis. So if you pay it off in the first year, you are required to pay a 5% prepayment penalty. In year 2, it's a 3% prepayment penalty, and year 3 is that 1%. After that point, it is actually up to the bank if there's any sort of prepayment penalty, but outside of that, there's nothing required by SBA.
Ron, anything you want to add on prepayment penalties?
No, other than 504 program, which is another SBA program, does have different prepayment penalties, but that's all for just real estate purchase.
Okay. And so I'll throw it back to you, Ron. What lending criteria has been tightened due to our current pandemic? I know you talked about this a little bit when you talked about conditions overall. So maybe just speak directly to what we're currently seeing.
Well, you know, as far as fighting on criteria, you know, we're not seeing a lot of, I mean, we're seeing less volume because people are less excited about starting a business, or they're trying to hunker down and they don't have the cash flow to go out and actually apply for a loan. But we're still doing a lot of business acquisitions. In fact, that's probably what we see most of. Certain industries, obviously, like restaurants and venues that do wedding venues and things like that. Hospitality is another one. All those have been hurt. So the tightening has been that there's just not enough cash flow to actually show that the loan can be paid back. So it's not, we just said we don't want to make those loans. The financials just don't bear out at making those loans.
Sure. And so, Jesse, anything you want to add on how you guys might have changed things at the Bank of Missouri, or how you're looking at things a little differently?
Yep. So I agree with Ron's comments overall. One of the big things we're trying to look at is like the overall picture. So again, as you mentioned, the historical financials, we've been trying to take obviously into consideration the previous years and what 2020 looked like and how it had an impact. And we do acknowledge that there are certain industries that have had a significantly harder impact than others. But then there are some industries that have had a fantastic year even through COVID. And so we're just trying to kind of do our best with the understanding of our borrowers to figure out kind of what their business, how their business has been impacted and what the next step is. And then one additional question we always do ensure that we get answered is, did the borrower get an EIDL loan directly from SBA? Did they get a PPP? Has it been forgiven? So that we can help estimate future plans on it. And then a lot of times, honestly, we'll ask for potentially a written statement on how COVID has truly affected their business and what that looks like.
All right. And then kind of our last FAQ, are there any additional documents required?
Who do you want to do that one?
Oh, sorry. Go ahead, Ron.
Okay. As far as any additional documents, honestly, there's only really 3 to 4 specific SBA documents that we require, that the SBA requires. The rest of it's normal requirements that the bank has for normal commercial lending. We do have some certifications, like we've got a marijuana certification because SBA doesn't allow us to do any business with any businesses that are involved in the CBD or marijuana, things like that. We do have the ability to do hemp farms. That was changed a few years ago, but just mainly those type of forms. But other than that, it's normal commercial loan documentation. Now, if there's specific loans like for business acquisition, you're going to have specific forms for that as far as the seller tax returns, business purchase agreement, things like that. So other than specific transactions, generally there are no additional documents other than what the SBA requires and the bank normally requires.
And Jesse, anything you want to add from the Bank of Missouri perspective?
Yep, no, overall, honestly, I agree with his comments. Kind of, again, to mention is that each loan, again, it's the purpose, the collateral, all of that does require different documents. So there's a lot of things that may be taken into consideration and change for loan per loan. So just something to always keep in mind.
Great. All right. So I want to talk real quickly about the Small Business Development Center services that may help you in obtaining or refinancing a loan, and then we'll jump into questions. So if you're not familiar, the Missouri SBDC does provide assistance to business owners at every stage of their business. So from feasibility, assessing that feasibility and startup, to growth and expansion, and even planning for that successful transition. We're here to help business owners. We do get funding from the U.S. Small Business Administration. We are not the SBA. We get asked that a lot, but we definitely partner with them on different programs like this one. And then that is where we are able to get our funding. And through that funding is how we provide our individual one-on-one confidential consulting at no additional charge to our clients. So that is not free because, of course, that is your tax dollars at work. But we don't charge extra to meet with people one-on-one, and we can meet with people, as often as you need us, so that we are being valuable to you. So we're here to support you as much as you need or as little as you need throughout the life of your business. So we have a lot of clients we help in startup. We may not hear from them for a little bit, and then they contact us again, when they're thinking about expanding or buying a new piece of equipment or something like that. So we're just here to support you however is helpful for you. We do provide a variety of training programs focused on, the fundamentals of business, but then also trying to help you keep up with things that are kind of up and coming. As you've probably seen, a lot of our training programs shift to, SBA disaster lending programs, USDA programs. So really just trying to keep business owners up to date. And then our center also does a variety of training programs focused on workforce development needs. So as you need to upskill your employees, provide some professional development opportunities, we're also doing a lot of that type of training as well. We do provide a lot of different types of research to our clients. One of them mentioned, I think Ron, you mentioned business plans can be very important as you assess feasibility of either starting a business or expanding a business, maybe looking at international trade. We can provide a lot of research to help you start to make those decisions. We have a lot of different databases that we subscribe to that just, any person would not have the access to. And so never hesitate to reach out if you're not sure where to find something. We're always happy to help you figure out where to locate it. And if we don't have it, we're certainly able to try to point you in the right direction. We have a lot of different tools that we, are always trying to get our hands on to help small businesses. And so as they apply to our clients, we're providing those so that they can have those in the future as they need them as well. And then something a little bit different on our center, what we love to do is really dive deeply into a business opportunity or a business challenge for our clients and look at, doing a really in-depth project. So we partner very well with our Missouri State University departments on campus. So whether it be you need a feasibility study and our students can help dive into that for you, maybe you need a marketing plan or a marketing strategy around a specific product or service or just in general. We do partner with a lot of different courses on campus. So if you ever have a need, we do have a page on our website that talks about the projects we do ongoing, but know that if you have a need, we're always on the lookout to see how we might be able to further support our small businesses as they need kind of a deeper dive into something. So, Jesse mentioned several times projections. We have a great team at Missouri State and really statewide to help you with those projections. A lot of times that's something that, a lot of business owners don't do every day. Sandra's on the call, I see. She and I love to do projections. All of our team at Missouri State is good at those. Business plans is another thing. So we don't write business plans for you, but we absolutely can help you with that research. We can give you templates. We can give you access to an online software actually for no charge for 3 months. If you take our business planning class, and really help you edit that plan, fill in the gaps, and just give you general overall feedback. So however we can be helpful in your journey of small business ownership, please reach out to us. We work very closely, of course, with all of our lending partners. So as you reach out to them, they may send you to us, and know that we're happy to help you through that lending process as well. So with that, I do have a few questions that I'll throw out to the panel that we've gotten. So someone here is starting a software business, and the primary assets, of course, in that world would be intangible. And so Jesse, could you start off and maybe comment on how you guys look at that and how you would assess that?
So overall, as I mentioned previously, SBA is not a collateral-based lender in any aspect. So in your business, if you are software-based and everything is intangible, then we do acknowledge that, and that is something that is obviously taken into consideration. And then if the business doesn't have any other assets, then that can be a stopping point there. I will note is a lot of times if you have significant assets in personally, is something taken into consideration is that if you have significant equity in your personal residence or something like that, you may be asked to pledge that if your business does not have honestly sufficient collateral or any collateral overall. So personal assets can be taken into consideration for that overall, but if the assets aren't there, then that is again not a condition for denial.
Ron, anything you would want to add on those intangible assets?
Sure. Like Jesse had said, you know, if the business itself doesn't have the assets to cover the loan, we generally don't turn down the loan just for that, because that's what we're going to the SBA for the guarantee. I do want to mention that loans over $350,000 that the SBA does require, if there's more than 25% equity, they do require a lien on any personal residences or any other investment property to bridge that shortfall of collateral, because we're required, even though we're not collateral lenders in the SBA world, we are still required to try and collateralize a loan on a one-to-one basis. Once again, like Jesse said, the SBA won't turn down a loan for lack of collateral, but we will look for real estate, both rental properties and personally owned real estate, if the loan's over $350,000. If it's below $350,000, they kind of let us use whatever we normally would do at the bank, which a lot of times we won't go after personal residences or any other collateral generally for those small loans.
Okay. And then I have another question here. Jesse, I'll throw this one over to you. What if you already own a building and the loan amount that you're asking for is only 20% of the value of the building? Would you still need that contribution of the owner?
So there are a couple different requirements on that. Is if you have already owned the business or owned the building and have owned it for more than 2 years, then you can actually typically use your equity in the building as your money have paid towards it, because obviously you've been making payments and focusing on that overall. If you just bought a business, or just bought a building or a property overall, it is typically focused on the sales price of it. So then again, something to just kind of take into consideration, but especially if you've owned the building for a long time and you've been making payments, you can definitely count that equity into everything overall.
And Ron, anything you'd want to add there?
No, same thing as what Jesse said. I do want to mention, though, when I said that the SB requires a minimum 10% injection into the transaction, generally what we're looking at is startup businesses or businesses, when we look at the balance sheet, doesn't have a strong equity position. If the business has been around for a couple years and their equity position on their balance sheet is strong, and you're wanting to buy equipment or purchase real estate, generally we won't require that 10%. We don't have to. because you already have equity in that business, and we're counting that equity as part of your contribution to the collateral position of whatever you're purchasing or whatever you're refinancing. So the 10% is kind of a general guideline, and depending on the type of loan and what the use of proceeds are, we could waive that 10% as a bank, as long as, like I said, there's enough equity in the business and you have a strong balance sheet. But if you're a startup, it definitely starts at the 10% for the equity contribution.
And so Ron, I'll keep it with you. Can a nonprofit be eligible to participate in SBA loans?
Not in an SBA loan. I know that they've allowed them to be participating in the PPP program, and I'm not sure about the EIDL program, the disaster loan. I believe they can also qualify for the disaster loan, but the normal SBA loan programs, the first criteria to qualify is you have to be for profit. Now, that being said, I've done deals where a church owns a daycare, and that daycare is a for-profit daycare center. We can do things like that. I've done that a few times. But generally, if you're a not-for-profit, you cannot qualify for an SBA loan.
Okay. And you're right, the EIDL nonprofits are eligible for that program as well. Jesse, anything you'd want to add there?
I actually don't have any additional comments for that.
Okay, so then I'll let you take this one. So to begin the SBA loan process, who should we start with, SBDC or one of the banks? What is step number one?
So overall, honestly, we are kind of partners between the two. You can actually start with whichever one you feel like is the best fit for your business. But overall, as a banker, we always recommend that you work with the SBDC, and kind of even at the bankers do at the same time. Especially if you are ready for financing, then you can kind of be pursuing both methods at once. But if you are not ready for financing, we ask that you definitely start with the SBDC first in order to go through kind of that preparation period, and then to be able to come back to the bank with everything prepared and kind of ready to go.
And I'll just add to that a little bit. So, Ron mentioned that character. And so when you walk into a lender and you have a business plan ready to go and you have projections that you've really thought out, and you're presenting that to them first, that always helps when you're walking in prepared. Ron, anything you want to add there on how you prefer people to kind of start that process with you guys?
No, we have a lot of people that come to us at the bank, but unfortunately, a lot of people that come to the bank are kind of unprepared for what they're asking or what they're trying to do, and we send them back to you guys. Honestly, the way I look at it, if you've gone to the SBDC first and you talk to them and you've looked at all the resources available, and that goes a long way as a lender, because they're the experts, and there's programs and grant programs and other programs that they have available that really show us as bankers that you're serious about the success of your endeavor. And a lot of times, like I said, that just gives us a strong feeling that you're going to be able to be more successful than just coming in the bank saying, I think I want to start a business and this is kind of what I think I want to do, but you've not done any research on that business. You've not done any research on the economy. And those are things that the SBDC can really help you with.
Okay, great. Thank you, guys. So we are right at time here. And so again, I just want to really thank all of our participants for joining us today. We hope that this was valuable for you. Jesse, Ron, and Ram, thank you so much for your time and your expertise. We appreciate all the information. We will be following up with all of you via an email and sending out a survey. So please share any comments with us, as we do use that information to help our programs continue to offer valuable training for you. So any feedback you can provide is always helpful. Also know, I saw in the chat a few times, we are recording this webinar and it will be up on our webinar library on our website, which is sbdc.missouristate.edu. Give us about a day or so to get that up, and then that'll be available for anyone to access. And again, if we can help you in any way at the SBDC, please don't hesitate to reach out. Our website is a great place to start. We have direct links to book a meeting with anybody on our team, whether you're looking at starting a business or growing your existing business. It's really easy to schedule a meeting virtually and visit with us. So thank you so much and have a great afternoon.